So now on to practical expedience. So as we are all probably aware, the transitioning to ASC 842 can be quite burdensome. So the FASB has provided some relief options to organizations to lessen the burden of adopting ASC 842. Companies can choose these options either by lease, by class of asset, or by an accounting policy election, really depending on what practical expedient. So we're going to walk through a few of these practical expedients today. Um, but one main thing I want to mention here, we're talking about a lot of the things that you'll want to do as you're transitioning. But the purpose of today's webinar is to think through the fact that not only do I want to do these things, I'll need to document these policies that I'm deciding on, also the procedures that I've followed in order to ensure that I have captured all of my lease information accurately. So definitely want to plan to include documentation related to your practical expedience and the reasoning behind each election. First election I'll mention is the package of practical expedient. So this is a package of 3 that needs to be elected as one, so you can't choose one of them and not the other. The 3 are you don't have to reassess lease classification. So if a lease was an operating lease or a finance lease under ASC 40, it can continue to be. There's no reevaluation of embedded leases. So you don't have to reevaluate if there is an embedded lease, or you don't have to reassess initial direct cost. I will mention here that if there are errors related to those lease classifications or embedded leases, you cannot grandfather in errors in this situation. But let's just say the accounting's good and you know that. You don't have to reassess those when transitioning to ASC 842. When documenting this, something that you could say is that, we've elected the package of 3, and we acknowledge that all must be elected together and applied to all leases. So that's a good way that could be documented. Again, this will also need to be disclosed in your financial statement, so that's important to note. Next is the short-term leases. So you can make an accounting election to not recognize lease liabilities and right-of-use assets for short-term leases. In general, a short-term lease is a lease that has 12 months or less for lease term. One thing that's important to consider there is even the contract states that it's 12 months, but you have 2 renewal options for 12 months that are reasonably certain to be exercised, then that would not be considered a short-term lease in that case. So that's something you want to consider there. If you do choose to elect this short-term lease, practical expedient can definitely save some time and expense when transitioning. It's important to know your reasoning behind it and also that you've elected it. So you'll make sure to disclose this in your financial statements as well as your policies within your organization. Next is the materiality threshold. So you want to develop, you have the option to develop a materiality threshold below which lease assets and lease liabilities are not recognized for the transition, lease liability and right of use asset. Now, one thing I do consider important to point out here is you'll want to consider the aggregate impact of a selected threshold. I've spoken with organizations who may have mentioned like, hey, we have a bunch of copiers, they're only $200 a month each. We consider that immaterial, but let's say they have 300 of them. Would that projected lease liability, considering all of them being excluded, be material to your financial statements? If so, then that threshold would not, would not work because they would be, your financial statements would be materially misstated. So you want to consider the impact in aggregate if you want to exclude all of your copiers. Whichever option you go with, if you're going to do a materiality threshold or not, you want to definitely provide some reasoning behind the materiality threshold you decided to go with, which this can be a complicated process because some organizations may try to just go to their fixed asset capitalization threshold and use that, but really this threshold should be developed independently from your other thresholds. So you want to consider all of your lease liabilities and the materiality of a certain asset class, if that's consider that option. So something I would consider discussing with my auditors as I begin preparing a materiality threshold. And then once you landed on a certain threshold, you'll want to document that in your policies and also disclose it within your financial statements. An example of something that I was thinking of that I would document in my policies is that I've established a materiality threshold of whatever amount, and based on ASC 842, I will not have to apply the ASC 842 accounting for lease liabilities and right of use asset for contracts with lease liabilities under a certain threshold. So something like that could be stated in your policies. Just remember to be clear on your documentation and reasoning behind your selected materiality threshold. Next is combining lease and non-lease components. So the practical expedience to combine lease and non-lease components is given to make things easier. So instead of, originally the standard said if you have different components, non-lease and lease components, you would have to allocate the total lease cost to each component, which can be quite time consuming. But this expedient allows lessees and lessors to account for each lease and non-lease component as one single lease component. So definitely can save some time there. It's important to note with this specific practical expedient, and a few of these are similar, is that you can elect to apply this to certain asset classes and not to others. If you choose to do that. If you do choose certain classes of assets to apply this practical expedient to and others you do not, you'll definitely want to document your reasoning why, so you and your auditors can gain comfort here. And then finally, the discount rates. We'll talk about discount rates more in detail in a moment, but the practical expedient that the ASC 840 or that the standard setters provided for ASC 842 is to allow private non-public companies to use the risk-free rate as the discount rate for present value calculations. And this can be applied by class of asset as well. So this can definitely save some time, as the risk-free rate is the easiest to find. It's probably the easiest to audit. Just some caveats with this is it's usually a lower rate, so it will inflate your lease liability and right of use asset. And it's also not available to public companies. So if you are considering about going public in the future, if you did use the risk-free rate and you went public, you would have to essentially undo using the risk-free rate and then apply maybe the IVR or the implicit rate. So we'll talk about more rates in just a moment. So that's it for practical expedience. Again, just want to reiterate, documenting the practical expedience you've decided to go with and the reasoning behind such elections. Anything you would add here, Sarah?
Yeah, I think the really key thing of what you just discussed from this slide is that these are, where the real judgment comes into play as a company and as a preparer and adopting under ASC 842. So we know that the FASB didn't want to have, very specific rules. There's, counting is becoming more principles based, and so there's some judgment that's allowed in here, and that's why you can consider things like these different type of elections or materiality or what type of discount rate you're going to use and how you're going to identify that discount rate. But those are the types of things that are usually, a little bit harder for the auditors to audit and understand. And so to the extent to which you can document as much as you can about your line of thinking, who you spoke with internally, if you spoke with your auditors externally, how you as the company came to these decisions, those are all the really important things to document here. And I know you'll mention it again coming up, but I know for myself, when I was doing this was a key part for me to get down on paper for our company, not just because of the fact that, we had to support that we adopted 842 properly, but this is going to be most likely your 842 implementation memo is going to be something you're going to keep around for a long time. And so if you have turnover internally, or, you have people that rotate out to other departments, or you have new people that come in and you've got to train them on doing the accounting in the future, this would be a good place to start. So if you've got it really well documented, somebody should be able to read through this memo and understand why each of these decisions were made and what the impact was.